Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for March 8th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You can see after we've seen that major rejection off 2400, we've slowly pulled back. We broke back below 82s, which opened up the door to 70s and even below. We've just reached lows here of 23.59.5, and what I mentioned to our group yesterday was failure to hold or get back above the 76.5 opens up at least a test into the previous week's low, perhaps even a little bit lower. But at some point here, we may begin to see the tide flow back to the opposite end here, as this thing perhaps establishes some sort of range on these highs. So right now, watching to see how this plays out a little bit more, but further weakness could be seen until we see some sort of rejection in this zone here between, say, 2350, 2359, somewhere in that zone. We could see some sort of rejection that could bring us back up the range, at least to identify an impulse range and a key range so that we can get some levels and some trading range action off of. So we've had a major uptrending market. The expectation now would be for more trading range or development of a trading range at these highs with an upward bias. So the idea is to continue to look to defend pullbacks for a shot at continuing or extending this trend, at least at the current time. So let's take a look at the intraday time frame. On an intraday basis right now, the previous session we had a trading range that we were watching for action. So basically right here, 23.66s basically in this zone. We had 76s in that area, and it was a two-way trade for a little while, and then this thing started getting lower highs and broke to the downside. So right now, we've just seen price retest prices above the previous session's close and kind of pull back a little bit. Getting back above 68s here has a great shot at squeezing back towards 75.5 and perhaps even 76.5. Once we do get into this area, it could be another short-term reversal back down as this thing tries to reestablish within the range. Failure to get above 68s points to further downside activity here, and again we have that previous week's low at 57.5 that we want to watch. Should price test that level or below, it could be a sign to watch for a trap and a reversal back up. All right, let's take a look at crude oil. Here's crude. If you look at this thing in a daily time frame here, we still remain within the range, but we're showing a downside bias at the moment. Obviously, to begin the week here, what I mentioned was the previous week had a range in the upper distribution of the range, and we should be looking for a likely push down toward the bottom, or at least in the 51.71. That was the early idea. Yesterday I mentioned to watch 53.60 because if there's any failure to find acceptance there, that could be a push back down toward the zone. Acceptance above 53.60 would have opened up a move up. You can see price pushed above 53.60, held momentarily, and then gave it up big. By the end of the day, it had taken out the previous session's close, and now we're hanging near the previous week's low. So overall, these participants here got their stops run the previous week. This pullback here early in the week defended. That opens the door to more weakness here. So right now, a downside bias with a shot at seeing 51.70. Keep in mind, we're still in the wider range here. So you have to be very, very careful about directionality of the current move within the trend, and then once we get to the edge of the trend, know that you can see major snapback reversals back within the range. So you have to be very short-term oriented at the moment. All right, if we take a look at the intraday time frame for CL, we got to push downward, obviously, after failing to hold. And again, here's that 53.60 that we were watching yesterday. Price hit a major rejection high up here. Major imbalances seen there in the order flow, and a swift pullback. Selling pressure lasted throughout the much of the day. We did hold in this zone for a while, but failed to recapture acceptance above 53.40, which led to weakness. So right now, we're at 52.50. That's the previous week's low. Again, the goal is always to watch for some sort of rejection signature at the previous week's low for a shot at returning prices back toward 53.20. But any bounce still could be a shot at selling this thing downward. So at the moment, bears likely to be positioned off 53s right in this zone, maybe even 52.90. right, in that area. So if price comes into that zone, look for bears to come in and start to look for weakness for another round of strength, another round of weakness to the downside. All right, let's take a look here at the NQ. Here's the NQ, the higher time frame. I haven't talked about the NQ in a little while here, so I wanted to kind of give a quick update on it. Obviously, we had the spike high here at 54 evens. Price pulled back. This week, we've seen bears defend the previous week's close so far throughout the week. Typically speaking, that would imply a move to the previous week's low. There are buy stops now above the close, so we'll watch these lows here. If price cannot get back below 53.40 here, then maybe this is a little rejection that could retest the close. So right now, again, very difficult little range we have going on at the moment because it's not very active on a swing basis. The flow is still to the upside, pullback still looking to be defended for perhaps another round of strength here. But at the moment, after an uptrending market, again, as I mentioned with the ES, we may begin to see some sort of range develop. And at that time, we could be looking at fading edges in the range as this thing builds out and creates some sort of balance or acceptance at these new levels. So right now, keeping an eye on this. Bears defending off the previous week's close, which suggests at least a test at the low. We'll see how that plays out. Now, on an intraday basis right now, here it is. You can see the initial rejection off the low down here and a big push back up, but above the previous session's close, a little bit of weakness. Very similar to the ES here. If this thing can get above 53.55, we could see a nice squeeze back towards 74.75. As I mentioned to our group yesterday, this is a spot to watch for selling pressure back down. We got that move very, very nicely yesterday. So if this thing were to come back up here, it may be another opportunity to drop it back down. So again, above 53.55 squeezes, and then into 74.75 is an opportunity to fade back. All right, lastly, let's take a look at gold futures. Here's a look at gold in the higher time frame. One thing about gold, we've seen a significant push to new lows, and that was something that we knew if price could not hold the 45s would likely lead to a retest at the opposite end of the range, and you saw how that played out. And then here we saw a rejection of the previous session high, which led us to believe that we'd get our stops run, or we'd see stops get run through 1230 and provide a move to the outer edge of the range, which is 17.5. We saw that transpire yesterday over the first 2 days of the week. Very, very nice. Now, we are now outside of the key range low, 1217.5. Key range high, 64.90. Midpoint here is 41.20. We're trading outside the range right now. This provides some sort of energy, perhaps, for maybe another rotation back up the range. So right now, again, this is your outside digestion day, outside of range. If this thing starts to push back above 1221s with acceptance, that could be a sign that we quickly bounced back toward 1240 with a shot at seeing further strength. So right now, going to watch this. Still in a downtrend, still trending lower, but watching for signs of rejection for perhaps a bounce back toward value at 32 and a move back toward the key range middle at 1240. On an intraday basis, again, we could be in a range down here on these lows. That's not intraday. Here's the intraday. We could be looking at some sort of digestion on these lows. You can see how aggressive that downtrend has been. This is the 1217.5 key level we want to watch, and there's the 1221s. So we could be in a range that we formed down here for a little while until this thing starts to recapture or reclaim prices above 17.5 and then above 1221. That could spark a nice recovery. So right now, still trending downward until we begin to see signs of rejection that implies a move back up. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.